What's up, everyone? Welcome to today's daily market recap. In today's episode, I'm going to break down all of my trades from the morning. Now, we're coming to the end of the month of July. Tomorrow is going to be the last day of the month, and it's been a slow finish. Monday, obviously, a red day. Tuesday, small green day, and here we are Wednesday, sitting with a small green day, up about $13,051.02. Hey, green is good. I can't complain. Well, but I'm going to complain a little bit because I'm missing the big momentum from last week. And so here's kind of the name of the game. I'm stepping up and I'm showing up every day, but I'm thinking about my risk. Risk is on the forefront of my mind. So, if I took a huge loss on Monday, if I lost like $500,000, just some huge number that got me so emotionally rattled, I might take a few days off because it might be very hard to come back the next day and focus on just hitting like a $5,000 or $10,000 small green day, even though that would be important as part of trader rehab, just to stop the bleeding and kind of begin to rebuild confidence. It might feel like, what's even the point? And I might start to swing for big trades to try to make 50 grand or 75,000 in one day, which would probably be the worst thing to do, because what would most likely happen is I would just dig the hole deeper and have a second red day in a row, and emotions would get even bigger. So if I had a really big loss, I might take a couple days off, maybe even the rest of the week. But in the context of Monday, the loss that I had was not more than I've been making on a typical green day. So when I came back Tuesday, I felt prepared to be able to trade the market and do the best I could. But I told myself, you don't want a second red day. So focus on showing up every day, taking small amounts of risk, and if you can get a cushion, then pedal to the metal, get aggressive. And if you can't get a cushion, then at worst, it's a small red day because you're trading with small size. And at best, it's, you get the cushion, you scale up. But sort of in the in-between, it's a smaller green day. And that's what yesterday ended up being, a smaller green day. And that's what today is ending up becoming, a smaller green day. Now, it's still early. I could choose to keep trading, but the writing is on the wall because the time of day that I make the most money has now come to a close. So my window of opportunity is closed. And if I chose to trade now for the rest of the day, I'd be trading during a time of day where my accuracy is lower, my profit loss ratio is lower, and even in the best market, I'm exposing myself to unnecessary loss. And in a more difficult market like what we've had today and this week, probably not a good idea. So that means I just have to sit with the fact that I'm still in the red on the week. Started down 58,000 on Monday, made back 7,000 yesterday. I'm up 13,000 today. So 58. So I'm down $38,000 on the week right now. If you've been tuning in for these recaps for many months, you know that it's very possible tomorrow or Friday I could have a nice trade and make $38,000 in 10 minutes. So I don't have really any concern. I have zero concern about whether or not I'll make back this money. It's just a question of how long is it going to be before we start getting some really nice action again? Is it going to be just another day or two, or is it going to be like a week or longer? And there's nothing I can do about that. It'll just be what it is. So I've got to trade the market I'm in, not the market I want to be in. So as we sit here this morning, BGLC is our leading gainer, but I'm only up $1,700 on it. So why was that? Well, this is a stock that's a little tricky. You can see it's popped up before back here. It sort of popped up, then it dipped down, came back up, dipped back down. So it has a history of popping and then, selling off. This morning, it started to pop up early and pretty much from the beginning was choppy. So I'm just going to move this out of the way. So if we look at it right here, it popped up and surges higher and then ends up being choppy right here. So this was not clean. Then you finally get a nice breakout right here, which I traded. But I was only able to make about 4,000 on it. And it dropped back down. Came back up, dropped back down. Came back up again, and I traded it again up in here. And I actually lost like a couple $1,000. Then I traded again up in here, and I lost again. So it's like it would pull away, but then that was it. It wouldn't continue higher. And that kind of price action is really difficult and really frustrating. Not that IMNN was much better. IMNN is a stock that popped and then basically did a full round trip. It popped up, it dipped down. I got in as it curled right here and then added as it pushed higher. It went to a high of 12 took some profit, dips back down, bought the dip, pops back up, small winner, sells off more, did a final dip here on the sort of washout for a tiny trade. And then I said, well, this is not good. It's not holding up. Now, you may recall this was on my watch list on Sunday. Why? It's a recent reverse split. And I thought, if they come out with news, this is the type of stock that could see a nice squeeze. Unfortunately, it didn't really work. Now, is that because the news wasn't good enough? Could be. Is it because sentiment has been a little bit weaker this week? That's probably more likely. Because the interesting thing is the same exact headline on two different days can produce different results. So like literally, same headline one day, stock will go up 500%. Another day, it goes up 3% and just stalls out. And it's a combination of the buying mood and the sentiment of other traders and what else is happening on the market in that day. If nothing else is happening, then that stock may get more attention. If there's a lot of dispersed attention, then, well, it's going to fight and compete for, that trading volume, and it just might not happen. So in total today, I peaked at about 16,000 when I was up about 4,000, almost 5,000 here. And then I sort of gave a little back, was up 15,000, and then gave back a little more and was up 13,000 and said, all right, you know what? I'm just going to call it. I'm not going to fight it. That's the thing. I don't want to dig my heels in. I don't want to fight it. I just, if the trades are coming easily, if we're seeing great momentum, by all means, I'm going to step up to the plate. I'm going to lean in. I'm going to get aggressive. But if we're not, I'm just going to sit on the sidelines. Now, the fact is there's a lot of traders right now, I suspect, I certainly see it from people mentioning it, who are also sitting on the sidelines. So just take me, for example, on a typical day where I'm up $50,000, $75,000, I may have traded 500,000 shares, 700,000 shares of volume, whereas on a day like today, only maybe 150, 200,000 shares. So trading a third of as much volume or maybe even less that I would on a really heavy day. You multiply that by, a million other traders in the market, and the net result is that there's a lot less volume. There's less volume because a lot of people are keeping their risk, their capital on the sidelines, waiting for something that really looks juicy. Now, some people have more patience than me, so they didn't even trade today at all, and that would be, I have profit to show for it, but that would be one approach. Other people are going to be a little less patient than me, and they're going to trade even more frequently, even in a tricky market. And there's sort of a curve of, at what point do you get diminishing returns all the way to losing money? So for me, I think if I kept trading through the rest of the day, I would just slowly kind of give back what I'd made. And you've got to be able to recognize, when do I stop each day? We can't stop always at our very peak. And even if we did, we could say, I could have made more if I kept trading. But kind of finding that sweet spot of when I'm going to walk away, that is a big challenge. So in these markets, I would encourage you, if you haven't already, to pick up this book, The Power of Knowing When to Walk Away, Quit by Annie Duke. You can listen to it on audio tape, whatever, and while you're driving around. It's a great book. And then a follow-up is, actually, I think she wrote this one first, but nonetheless, Thinking in Bets. These are great books. And we're in a time where you've got to be a little bit more tactful. You've got to be a little bit more thoughtful about where you're, putting your risk and what you're jumping into, because we are seeing some big moves. But, if you get in the wrong way, it's not so fun. So manage your risk, take it slow. Hot markets will come again. This is the ebb and flow of trading. So this is the time to study up, pay your dues, and then you'll be better prepared when things pick back up. All right, so with that reminder, easy come, easy go. Trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you back here live streaming bright and early tomorrow morning, 7 a.m. for members at Warrior Trading.